Hey Live, how you doing? This is Coach Keon Corniff, also known as Mr. Finance, your favorite financial educator and business coach. And today I'm here to talk to you guys about smart banking. All right, it is very important for us to understand smart banking. You want to learn about smart banking. And guys, I can't stress enough about the importance of understanding smart banking. So, like I said, today I'm going to talk to you guys about smart banking, how to bank like the smart rich people do, where to put your money like the banks are putting your money, right? Because a lot of people have been putting the money in the bank and not understand that the banks are not putting money in the bank. So we're going to talk about smart banking today. We're going to show you how to be your own bank so that way you can understand the lingo. So if you're coming in just now, comment below where you're tuning in from. Make sure you hit that follow if you want to continue learning how to be your own bank. I'm giving away all the sauce, all the secrets, and I'm telling all the truth. So if you're just tuning in now, make sure you drop where you're tuning in from. Tell a friend to tell a friend and let them know that Mr. Finance is live again, because I'm here to talk to you guys about how to be your own bank and what it requires for you to win. So guys, here's what's happening. When you go to the FDIC website, right? When you go to the FDIC website, guess what? Go to the FDI website right now and you'll be able to go underneath the column called banking. Once you go underneath the banking column, guess what you're going to see? You're going to be able to see the fact that in this column, you're going to realize that the banks are putting a lot of their money, which is called tier 1 money, inside of cash value life insurance. That's where banks store their money in order for them to have what's called a tier 1 account. So if you want to understand this, let me give you an understanding. The bank purchased something called BOLI, B-O-L-I. It's called bank-owned life insurance. The reason why the banks go out and own life insurance is because it gives them what's called four things. Four things that cash value life insurance give you and why the banks are using it and why you need to start using it too. The banks are getting growth where they're getting compound interest, guys. Imagine when we put our money in the bank, we get what's called simple interest. And then on top of that, we also signed up for what's called fractional reserve banking. Now, when it comes down to the banks, they're putting their money with the insurance companies, and the insurance companies are giving them compound interest, which means that their money gets to double way faster than you can ever get your money double with them. Now, the banks also put their money where they get safety, meaning that they guarantee never to lose money every time the market crash or correct itself. So the bank get what's called safety. We don't get that. We don't get that in our 401ks. We don't get that with our IRAs. We don't get that in our stocks. We don't get that in our mutual funds. We don't get that. But with the banks, they have learned how to get that inside of the insurance companies that guarantee them what's called a floor where they never lose a dime. Then on top of that, the banks also get what's known as, yes, living benefits. Did you know that the banks have what's these cash value life insurance that also comes with a lot of living benefits and with a lot of perks, which means that every time they get a chronic, critical, or terminal illnesses, the banks will make sure that money will be there to take care of that. And when they need the money, they get tax-free money, and it's due to the IRS tax code. Write this down. Do you hear what I'm telling you guys? Write this down. The banks use the IRS tax code 7702 section A, which makes life insurance tax-free upon withdrawals or even taking a loan. And upon death, they also pay out death benefits to your family where they get the cash value and the death benefit tax-free. How come we never learned this? Why no one teach us this? How come no one ever encouraged us to be our own bank? Did you know there's 3 ways your money get taxed when you need it? Did you know there's only 3 ways your money get taxed when you need it? And why no one is teaching you this? That's the reason why I want to encourage you. Click the link. Click the link in my profile and you get access to my free classes, free coaching, free mentorship, and an opportunity that can also change your life. That's what I want to encourage you guys to do. So that's why I wanted to come on here and tell you how the banks are winning for all these years and no one was telling you. Like I said, you don't believe me? Go to the FDIC website and search underneath banks. Look at the portfolio and you will discover something amazing. You would now witness the truth of how the banks been winning for all these years when you thought the banks was out here taking risks with our money. No, the banks do what's called infinite banking. That's what they do. Infinite banking. There's an amazing book that was written by a guy named Robert Nash called Infinite Banking and Be Your Own Bank. You need to read that book. You need to read that book. And you want to read that book because that book could change your life. So guys, I'm telling you, make sure you share this live with someone. Make sure that you tell somebody. Make sure you reach out to somebody. If you want to get more access to this type of information, follow me right now and you won't be sorry. And I'm telling you, get in my class. It's free. What do you have to lose? What do you have to lose if it costs you nothing? All right, guys. So I'll see you at the top. Until next time, my name is Coach Keon Corniff, also known as Mr. Finance, your favorite financial educator and business coach. And I'll see you guys at the top. Peace.